Are you a landlord here in the UK? Well, you're going to want to listen to this. We are about to break down one of the most confusing and, let's be honest, potentially expensive topics out there, VAT on your rental income. And all the expert insights we're sharing today, they come straight from the specialists at ProTax Accountant, and they're designed to save you from some very real headaches.
So let's just start with a really important question. Are you 100% certain you're handling your property's VAT correctly? Because a simple misunderstanding, just a small one, can lead to some pretty significant and, frankly, unexpected bills from HMRC. This is genuinely one of the most common and costly mistakes that landlords in the UK make.
All right, so here's what we're going to cover. First, we'll get the fundamentals of that for landlords sorted. Then we'll look at the very different rules for residential, holiday, and commercial properties. We're also going to highlight some of the most common traps to avoid. You'll want to pay close attention to that part. And then we'll talk about how you can get some expert help. Okay, let's get into it, starting with Section 1, the absolute basics. You know, it's so important we're all on the same page with the core concepts before we jump into the trickier stuff.
So what even is VAT? Well, think of it as a tax that gets added to most things people buy. Now, as a VAT-registered business, and yes, landlords can absolutely be considered a business, you're not really the one paying the tax. You're actually collecting it for the government on behalf of HMRC. You're basically a temporary tax collector. Now, this number right here is probably the most important one in this whole discussion. £90,000. For the 2025 to 26 tax year, this is the magic number. If your income from certain types of rentals, and we'll get to which ones in a minute, goes over this amount in a 12-month period, you must register for VAT. It's not a choice, it's the law.
Of course, it would be way too easy if there was just one VAT rate, right? So in the UK, we've got three main ones. The big one is the 20% standard rate. Then you've got a 5% reduced rate for some things and a zero rate. Now listen closely because this is super important. Zero rated is not the same as VAT exempt. With zero rated items, you charge 0% VAT, but, and this is key, you still get to claim back the VAT on your business expenses. It's a huge difference.
Okay, so let's move on to Section 2 and see how this all fits together. We're talking about residential rental income now. You know, the bread and butter for most buy-to-let landlords in the UK.
So here it is, the main point. If you're letting out a house or a flat on a standard long-term tenancy, the rent you collect is exempt from VAT. That is the default position. You don't charge your tenants VAT, and you don't need to worry about that $90,000 threshold for this particular income stream.
But being VAT exempt is a real double-edged sword, and this shows you why perfectly. On the one hand, great, your rent is more competitive because you're not slapping an extra 20% on top. That's a huge plus. But the downside is pretty big. You cannot reclaim the VAT you pay on your expenses. Just think about that for a second. The VAT on a new £3,000 boiler, or hundreds on redecorating, or even your letting agent's fees. That 20% VAT you paid, it's gone. It comes straight out of your pocket, right out of your profit.
Now let's switch gears and look at a completely different ballgame in Section 3, UK holiday lets. So if you're running something like an Airbnb or a furnished holiday cottage, HMRC sees this very, very differently than a standard rental. And here is where the rulebook gets completely flipped on its head. That rental income that you thought was exempt, well, for holiday lets, it's not. It's what's called a taxable supply. And that means every single pound you earn from your holiday let counts towards that $90,000 threshold. The second you cross it, you have to start adding a 20% VAT charge to your guests' bills. Okay, here's a quick pro tip for you. And trust me, this could save you a massive headache. Don't wait until the end of the year to check your turnover. If you're getting anywhere close to that £90,000 mark, you need to be tracking it on a rolling month-by-month basis. Accidentally going over that limit and not registering on time can lead to some really painful penalties from HMRC. All right, let's move into what is probably the most complex part of property VAT in Section 4, commercial properties. Now, by default, renting out a commercial property is also VAT exempt, just like a residential one. But, and this is a big but, here landlords have a really powerful choice to make. This choice is called the option to tax. And you might be thinking, why on earth would anyone volunteer to charge more tax? Well, the answer's simple. It lets you claim back the VAT on your costs. Imagine you're spending £100,000 refurbishing a new office space. That price includes £20,000 in VAT. If you haven't opted to tax, that 20K is just gone. But if you have opted to tax, you can claim that entire 20 grand back from HMRC. That is a massive boost to your cash flow.
But, and I cannot stress this enough, this is not a decision to be taken lightly. The option to tax is, as you can see right here, pretty much irreversible. It actually sticks to the property, not the owner, for a minimum of 20 years. You can't just change your mind a few years down the line. This long-term lock-in is exactly why you need expert advice before you even think about ticking that box.
All right, we have covered the basics. Now for the really tricky part. This next section is all about the common traps that even experienced landlords can fall into. And trust me, getting one of these wrong can be a very, very expensive mistake. Okay, let's quickly run through these because each one is a potential minefield. First up, mixed-use properties. Think of a shop with a flat upstairs. You have to meticulously separate all the costs for the commercial part, which could be VATable, from the residential part, which is exempt. It's a bookkeeping nightmare if you're not on top of it. Next, lease premiums. Say you've opted to tax your commercial property and a new tenant pays a big lump sum upfront. You have to add 20% VAT to that premium too. Then there's TOGC, transfer of a going concern. This is a crucial one when you sell a commercial property that already has a tenant. If you get the rules and the paperwork exactly right, the sale can be outside the scope of VAT entirely. Get it wrong, and you could be on the hook for 20% of the entire sale price. Ouch. And finally, new commercial buildings. If you sell a commercial building that's less than 3 years old, the sale is automatically standard rated for VAT. This catches so many people out. Honestly, each of these needs specialist advice. So, after all that complexity, let's kind of bring it all back together. It's pretty clear that navigating property VAT isn't really a do-it-yourself kind of job. The risks are just way too high. An expert review is, without a doubt, your best path to making sure you're compliant and that your finances are as efficient as possible. So here's a really quick summary of the key takeaways. For your standard residential property, it's simple. Income is exempt, but you eat the VAT on costs. For holiday lets, think of it as a taxable business. You have to register and charge that if you go over that 90K threshold. And for commercial properties, it's exempt by default, but you have that powerful option to tax, which lets you get VAT back on your expenses. Okay, and before we finish up, it is absolutely essential that we state our disclaimer. The information presented here is for general guidance only. Tax rules are complicated and they really depend on your specific situation, so you should not rely on this alone to make financial decisions. Look, the bottom line is this. Don't guess with this stuff. Before you make any big decisions, please talk to an expert. The team at ProTax Accountant, they live and breathe this every single day. You can get in touch with them directly on WhatsApp or by phone on 07985 689 912, or just drop them an email at info@protaxaccountant.co.uk. For even more detail, go check out their full article on the website. And of course, for more helpful guides just like this one, make sure you subscribe to their YouTube channel. Thanks so much for tuning in, and we'll see you next time.